Hello, everyone. Thank you for joining us for the weekly wrap-up. My name is Jeremy Kronemeyer. I'm the operations manager here for Wickham Financial Group, and I also have with us Graham Wickham, who's president and CEO of Wickham Financial and Insurance Services. Graham, what happened in the investment markets last week?
Yeah, thank you, Jeremy. We had a pretty modest week last week. I think some question marks or some uncertainty about the path of interest rates. So that being said, we did see some pretty strong economic numbers. How did that translate into market returns? We saw the S&P and the Nasdaq up about 1%. We did see the Russell up about 1.7%. 1.7%. What sectors outperformed? In general, we saw 8 of the 11 of the S&P sectors up, led by energy up about 5%. We saw communications up about 3.8%. Crude oil took a pretty good jump last week. We saw that up about 6.5%. We look over to GDP numbers, and I think this was a bit of a surprise last week. We saw that up about 3.3% on an annualized rate. Listen, the forecast was only 2%, so that was a good bit of a pop. We saw some pretty good numbers coming out of the consumer, still spending. That was up about 0.7% month over month, so driving those numbers up. If we go over to inflation, we looked at the personal consumption numbers. That rose about 2.9% year over year. Now, that was pretty near a 3-year low. For a 6-month basis, 6-month annualized basis, we saw the core PCE inflation register about 1.9. Now, keep in mind, that's a measure that the Fed really likes to look at. Their measure, they want to see it about 2%. So that's 2 consecutive months below the Fed's target of 2% at 1.9. So that's in the right direction, correct? So if we go over to U.S. business activities, we saw that pick up pretty good with manufacturing services. The PMIs registered some expansion areas. If we go over to housing, housing saw some stable home prices. We saw maybe some easing in mortgage rates, which I think helped those numbers. So we saw new home sales up about 8% month over month in December. We saw some pending home sales rise to about 3.8%. Now, if we go overseas, we saw the European Central Bank held rates unchanged, still with the general statement that they felt that maybe it's a little still too premature to start cutting rates, even though we saw some negative sentiment in terms of manufacturing within the businesses and whatnot. Germany, maybe some other Eurozone areas that might force the hand a bit to maybe speed that up a little bit in terms of their cutting. But they're not showing their cards any more than our Fed is in the United States. Bank of Canada kind of didn't do anything with their rates, but we did see something interesting in China kind of spur borrowing and lending to try to get the economy up a bit. They lowered their banking reserve requirements by 50 basis points, and I think that helped buoy those stocks a good bit. Jeremy, this week I think is really, really key to the market. We have the Fed. It's going to have a lot of conversations. They're meeting on Wednesday. What is going to come out of the meeting? What are they going to say? What are they going to say for the markets to either cheer them on or maybe allow the markets to pause a little bit? We'll see, because they can move the markets just with their statements. Huge week for the Mag 7, the ones that really led the S&P, that continue to lead the S&P a bit here of late, now that we started the first of the year. So we got massive earnings that are coming out this week that's going to set the tone of the market.
I got you. Well, I had a question for you. I know you mentioned the Fed meeting tomorrow on Wednesday. If the investment markets don't hear what they want to hear, what do you think that'll do to the investment markets?
Well, as we've mentioned before, I think we're a bit stretched, especially, let's say, in the Mag 7 area. Doesn't mean they're not super high quality companies. Of course they are. But we might just be a little overstretched in the very short term. So I think that would give the markets an opportunity to pause. Maybe some other sectors maybe move up a little bit in their performance, where they've lagged a little bit this year, or even last year they lagged coming into the last 2 months, even though they picked up some steam. I think the market is priced a little bit in the very short term to some perfection. They want to hear everything they want to hear from the Fed, and they want to see the earnings are still good. And if they hear what they want to hear and the earnings are still good, the market has an opportunity to continue to grind higher. So it could go in the other direction compared to not hearing what they want to hear.
Sounds good. Well, we always appreciate
Yeah.
the insight. And again, thank you for everybody joining us today. I did want to mention, we got some multi-day A to Z retirement plan courses going on right now that Graham teaches. Our next set will be in March, kind of first of March, middle of March. So if you know somebody or you'd like to sign up for that, just check out our website at wickhamservices.com. All the info's there where you can register and get more information. And we look forward to seeing you there. Also, we're going to be doing our monthly or lunch and learns on a quarterly basis now. So check out our website. We'll send out on the last Wednesday of every quarter. We'll be doing those lunch and learns. So just be on the lookout for those emails to sign up for those as well. And once again, we look forward to seeing you next week, and have a good week.
Take care.